favorite participants in the global arena that create volatility. So I see some people saying yes, some people saying no. There are more yeses than no's. So I'm going to go ahead and take it that you can see my screen. Okay, so we're going to just kick it off and just take a moment to read this disclaimer. So this kind of just goes through some of the usual clauses that this is not financial advice. This is for educational purposes. So you can just take a moment to read that. And just if we do get disconnected at any point during today's session, just keep an eye on your inbox for a new link. It's only happened once before, but if it does happen, that's what you can do. All right, so now that that's out of the way, in today's stream, we're going to talk to you about how you can accelerate your growth like the consistent traders on our trading floors using Axia's extended edge formula. Now, if you've been to one of our workshops before in the past, you may have heard the story of Axia. So I'm going to go through that really quickly, but we're going to answer the question of how have the Axia traders been performing in 2022? And we're going to just go through the story about how today came to be. So if you have heard the story before, I'm going to go through it real quick, but for anyone who's new to Axia, I'm just going to tell you the background story. So basically, you may recognize Alex from just a moment ago. So here he is back in the day when Axia was just getting started and he was getting started in the world of trading. And over time, Alex back then was a mentor on a London trading floor with hundreds of ambitious traders all trying to make it in this game of trading. And on that trading floor, Alex came and coached traders and observed the top performers and developed a training system that modeled the behaviors and best practices of the top performers. And his approach became so effective that the mentoring team was expanded and inspired other senior traders who enjoyed helping develop traders on the floor. And fast forward to today, many of these traders now make up our teams of multiple 7- and 8-figure traders on our floors in both London and Poland. And there's a stream of young mentees in the team, hot on their tracks, such as Harry, there's Adam, there's many other additions to the trading team who've learned how to build professional trading careers based on what's been put into practice by a proven team of elite performers in the Axia teams. And there are those who train or trade with us remotely and report that the type of training and support they get at Axia they don't find anywhere else with so much comprehensive depth. And since then, Alex and some of the traders from Axia have appeared in places like Bloomberg, the Chat with Traders podcast, Real Vision Finance, and all of this is to show you the impact that Axia as a community has had on the lives of these traders. And I want for you to be the next Harry, the next Adam, the next Brannigan, the next Alex, and hopefully to surpass him. And the aim of what we do here today is going to help is to try accomplish that. So here's how today came to be part 2. So if you recall back to 2016, it was a few months before Brexit. And while many of the traders back then were still high growth, relatively young traders at the trading floor I told you about earlier, something unexpected happened. And that was that they were forced to start from scratch. So the company handling trader capital back then mismanaged the funds. And many traders woke up one day to find that their accounts had just disappeared overnight. And unwilling to give up, a small group of them pulled together like a band of brothers, if you will, sourced financing from friends, family, and contacts who believed in them. And they set up in a small London office and came together to trade the Brexit referendum result, which you may recall created significant market volatility and major overnight moves. And you can see that some traders even slept next to their desks that night to avoid missing the open the next day, because over the years they perfected a specific strategy for trading the open after events just like this. And guess what happened? I'm sure it comes as no surprise, but they traded well and bounced back well enough to secure their own office and thereby launched Axia Futures. And since then, many have gone on to achieve 7 and even 8 figures in just over 3 years. You can watch multiple examples of their live trading on our YouTube channel. And this is all on live trading accounts. And I like including this picture because it shows you the comparison of when you're trading on a third-party platform using the price ladder. When you open up a demo account, it will say simulation. And on live accounts, it doesn't. And you can go test this out for yourself. And so this is all to show you that this is real profit and loss with real capital at stake, all there for you to watch on our YouTube channel transparently. And the question is, would you like to know how they did it? What did they do to bounce back when the odds were stacked against them? And I'm sure it's a resounding yes. Of course, you want to know this information. That's why you've joined us here today. So on today's workshop, we're going to be covering 2 trading setups from the crisis events that have been going on in the markets that Richard's going to show you and go through some of the best practices that have been used at Axia. You're going to learn about how the team performed during the summer markets of 2022, some of the unique ways of managing their performance and seeking out edge in the markets. And then we'll be looking at how a junior trader had his first $15,000 day in 2022. And then how you can leverage up your technical setups using macro data. So Richard's going to go into this in more depth. And then we'll be talking to you about how you can potentially gain access to funding and a place on the Axia trading team. So I hope you're excited. I'm going to bring Richard Bailey on in just a second. But before I do, if you're new to Axia and this is your first time meeting Alex and Richard, I'm just going to give a quick intro of who Richard is. So he's responsible for developing a lot of the strategies that are used by our traders. And Richard started trading back in 2008 during the great financial crisis and learned from a lot of great technical traders at the firm that he was at and was mentored by traders there. And during that 2008 volatility, he was able to adapt his style and started using professional tools like market profiles and price ladders. And this has all helped culminate and form the latest Axia training method, which is now taught to all the traders on our desks. And he's mentored many traders from junior to elite, so he really knows what it takes to build a successful trading career from scratch and how to achieve and compete at elite performance levels. So without further ado, please welcome Richard to the call. Richard, can you say a few words to let us know that you're there?
Yes, you should be able to see me. I'm actually, in the office as well. So I'm downstairs. You can just about see a little bit of the training room in the background, which is kind of my domain nowadays, where I live most of my time. Right, but it is good to be here. You will have seen some of the YouTube videos that we've done, part 1, 2, and 3 of this. So for those of you who were there on those, welcome back. Good to see you all appearing again. Good to see some of the names that I've seen throughout some of those videos or some of those workshops in the past. Right, I've now got control. I'll share my screen and let you guys in on what we're going to be doing a bit of today. Right, hopefully everybody should be able to see my screen all good. And we're going to go through a few different things. I've set this out, broken this into 3 parts for you, and these parts are as follows. What we're going to look at is 3 different phases. We're going to look at growth, and as Craig talks about, we're going to look at a junior trader and how they've grown throughout the year. What's the difference between 2 junior traders, one who's massively excelled and one who hasn't? We're going to look at why is that coming from? Why has somebody managed to achieve this? We're also going to look at opportunity. For those of you who've traded throughout summer, I'm sure you will have felt that the opportunities have been lighter. There's been that little bit less going on. This is absolutely the case. We'll look at the relative amount of trade that our team did, say, from June compared to August. But importantly, it's about understanding where the opportunities are in this environment, because just because it gets quiet doesn't mean you can't trade. Doesn't mean there's nothing to do. There's less to do. The profitability hasn't really diminished over the course of August. I just saw a no. Is that a no in terms of being able to see my screen? Because I believe most people should be able to see it. So if other people can't, let me know. Final thing we're going to have a look at is then also variations, because no 2 traders are exactly the same. So if you're going to try and trade the opportunities for this year, how do you go about it? Not everybody's going to be following the same kind of format. So this is what makes trading. This is what we try and teach everybody, that it's about cultivating your own style, understanding your own way of doing these things, and then being able to develop those skills outwards. So we'll go and look at 2 different ways essentially to trade the same opportunity. First up though, as I said, we're going to look at progression throughout this year and progression of 2 junior traders. Now, these 2 traders started off roughly at about the same time. They've both done the same amount of training, but one's excelled massively recently. And what we're going to look at is, well, why is this? What's different about the trader at the top who's managed to run up to approaching 100 grand now, and the other one who has struggled so far? This is the reality of trading, though. So don't get me wrong. I'm not envisaging that this is the end for trader number 2, if you will, at the bottom. It's just that he's yet to sort of find that growth phase. So we want to look at, well, what is it that created that growth phase? What is it that sort of kicks a trader on and gets their career to explode? Because this same time period, same 2 traders with the same amount of sort of base knowledge. And what it's all about is the way they've gone about learning. You often hear in trading, in most walks of life, that if you want to improve, if you want to get better at something, surround yourself with people who can help you. And that's absolutely true. But that's the base level. And what often happens is people curate a number of people around them who, seem to know a bit more than them. They're sort of what they aspire to be. The thing is, though, what you've got to do then is you've got to identify from yourself what it is that you need to improve, and then lean on those people to help you improve it. You can have all of the support, you can have the greatest people around you, but if you're not going to sort of actively go and hunt down what it is that you need to improve and then find the solution to that, lean on the people that are going to help you in that situation best, that's how you're really going to grow. The more silo trading, now don't get me wrong, he's got some good ideas, and I speak to him regularly about some of his ideas. And where he's missing out is what I call living in the principles. People can learn a lot. People can take on huge amounts of knowledge. But if you just live in the principles of the knowledge you understand, you end up with this quite narrowed view, never able to kind of branch out and see how other people are perhaps seeing things. And this is that concept of extending your mind. And so essentially the difference between the two traders is their willingness to go and collaborate and hunt down other people who are going to help them specifically with the areas that they want to improve. That informal collaboration I'll talk about a little bit further in a little while. Regarding two of our senior traders, this isn't something just from junior traders. And so the difference being that understanding is not currently being turned into action for the more silo trader, whereas it absolutely is for the more collaborative trader. So how's he done it? If any of you saw a workshop that I did earlier on this year, we talked about the progression of some of our traders throughout the first half of the year. One of our elite traders had a huge growth phase through February, March, a massive growth in performance over that period. And really, this comes down to his ability to grasp a theme and absolutely maximize the ultra volatility that the Ukraine-Russia crisis created. So what's happened is that collaborative trader identified, and I've spoken to him numerous times about, he was very good and very clear on his technical trading, but what he was not so clear on is how does he transact, how does he engage with high volatility, the greater uncertainty. And so he then went to this elite trader, to one of the best people in the business at this, and spoke with him. He spent time going through, why has he done this? Why has he done that? What's his view on this bit of data? What's his view on this change in the narrative? And this way, it's not copying. What he's doing is he's trying to understand the thought process, the way to see things. And so what he's then been able to do is put these skills into action. And yes, it doesn't pay him throughout March, February. As you know, if you were very, very observant on the last slide, his growth doesn't come until June. But what this is all about is having put that collaboration into action, having learned from that elite trader, he's then able to put this into action. So if we look at the comparison between two traders now, the more junior trader excels throughout June towards the end of summer. And the reason that he's doing this is because of what we call an edge gap. We talked about this previously. And the edge gap is all about understanding where you are in your career. For a junior trader, what they learn in February, March, doesn't pay them. Of course it doesn't, because they're learning how to do it. They're learning what it was and what it is that the more senior traders are doing and how they're making their money. And so this edge gap then is an easy edge gap to close, because all of a sudden now with this new skill set of how to trade data better, how to trade narrative better, how to trade spurts of volatility better, he's now able to increase his risk, increase the way he takes on trades. And so this then creates this major jump in performance. Whereas for the more senior trader, having already cultivated this skill, having already not mastered, because no one's ever mastered it, but has gone a long way to being able to trade high volatility, he's then maximized the opportunity from March and February, and with comparatively lower volatility throughout the rest of the year, has not been able to see that same level of growth, simply because of the fact that it's not possible to extract as much out of lower volatility than what he's been able to maximize in higher volatility. Whereas the junior trader is now maximizing those opportunities. And this all comes down to understanding of environment shift. For a junior trader, having developed a new skill set, having been able to navigate February, March, this skill set then comes to pay him in other areas of narrative and data trading. And so this has then created this massive jump that we then have got. And if you look at the graph that I've got there, what this is showing is his daily peaks and troughs. So the blue, the daily peak in P&L, the red, the daily trough in P&L, and then the gray is the overall daily P&L. And what you're able to see, or what you are seeing very clearly here, is that his ability to use the skills that he's gained is what's allowing him to now increase the risk taken on trades, because he's much clearer about the different types of trades that he's got. What this also does for you, I know people are often worried about sort of, the risk of being stopped out and the impact of the downside that they have. What it's also giving you is the ability to limit the downside. And the reason that he's able to limit the downside is because he's now got more awareness of opportunities. By understanding different opportunities that are out there, what he's able to do is filter these easier. And he's able to then not get trapped in those, but at the same time, much better maximize the opportunities that he is given. And this then all comes back down to understanding environment. I've talked about this, those who were on the last workshop that we did. I talked about this kind of concept that you've got to understand the trades that work in certain different environments. And then when those environments return, the skills that you have learned are then what come and pay you. And the big jump being here, that this jump isn't because of all of a sudden you've got massively more skill set. The big jump comes on the fact that your career is already growing, and now you're able to take skills that you've got and really drive them. And that's what creates that exponential growth, because you now understand these skills better. And this has all come from that collaboration, that leaning on somebody who's got that bit that you need, and you've actively found the area where you need to improve, and then go and seek the expertise needed to be able to cover over that and to improve yourself there. So that's the growth phase for one of our junior traders. So where exactly have those trades been coming from? And this is then all about summer. Where were the opportunities? Like I said at the beginning, summer was reasonably quiet. And what I've got there is that's on the number of trades done in June compared to the number of trades done in August. So that's total trades broken down into winners, losers, scratches. Nearly double the number of trades were done in June. It's almost exactly double, in fact. Number of trades were done in June compared to August. Performance as a group, and this is as a group, so this is around about 20 traders of ours in London. As a group, performance was around about even between those two months. June marginally beat August, but not by a great deal. So where's the opportunity? Because if you're doing far less trades, then what this is saying is that the performance must be extracted from fewer opportunities, but must be very, very well extracted. And this is where traders have been concentrating over summer. The opportunities diminish, and it's about maximizing the opportunities when they do come up and not getting sucked into the minor opportunities. This all comes down to understanding environment. There's various different environments that markets will trade in, and I've got them listed there, from high volatility and high correlation through event and theme driven markets, technically driven, low volatility driven markets, and low correlation environments. What we had this summer is what I would describe as a low volatility event or data themed environment. So these environments do have some crossover. that just because volatility is low, which is what has happened throughout summer, certainly compared to what it has been recently, event and data driven event and data driven markets is still there. So you have this sporadic jumps in opportunity that are coming out of this low volatility period. And to illustrate this further, this is where all of the performance has come. So this is performance by hour throughout August. And you see it's all concentrated into 3 hours. Basically, the period crossing the majority of the US data and then also crossing over the open of the US markets. And that's where essentially all of the volatility comes in, all of the volume comes in. And what this comes down to is understanding what is typical of low volatility markets. Now, when you have lower volumes as you get over summer, this reduces liquidity as well. So you get lower volatility, lower volume, lower liquidity. Now, large participants, think banks, hedge funds, insurance funds, all of those, they need volatility to get their business done. You can't buy vast numbers of contracts if there is nobody else trading. So where do they get their business done? Where the volume comes in. And so where the volume comes in is around data points and around opens. And this is what then produces what we call a more clean auction. More participants, more ability to trade. Therefore, you get more clear action. Those who want to participate and need to participate in these periods of time. If you go and compare what this looks like then, volume and volatility from when we got very, very high volatility. This is going back. The chart on the left is the back end of March 2020. And then the chart on the right is the back end of November or mid-November 2021. Volatility is significantly lower. At this point, it was around about 17 on the VIX compared to 75 on the left-hand side. So what happens then is the volatility creates more volume, but also because situation is changing so frequently in high volatility, the majority of trade gets ushered to the end of the day. So you see on the bottom graph, the little blue line is the spikes in volume. And that's what is the average volume per hour. So those spikes in volume come in at the end of the day on the left-hand side, whereas very flat between the open and the close when volatility is lower. Quite simply, when volatility is high, people wait to the end of the day, take on all of the information, and then trade afterwards. And this is why all the volume comes in towards the end of the day. Whereas in low volatility, it's much more evenly split. And the volume will then come in where the greatest amount of liquidity is, which is generally around the open and around data points. So how do you go about trading these data points? I'm going to illustrate this looking at the recent August CPI data and how exactly you go about trading this. So this is going to be a order flow execution trade. What do you do on data? So I think this is an area that people really don't master or try and keep away from. And it's about understanding of where the opportunities lie in this. Now, we talked about this last time about how the algos trade and what then happens on any type of event. Sorry, one step too far. And it's about understanding some of the activity that the algos do and understanding essentially where you can win, because that's the key to being able to trade data. Data is not as simple as saying to yourself, oh, look, that piece of data was positive, therefore market should go up, I'll just buy. Because there are many other participants trying to do the same thing. So in order to attack the data, you need to understand the sequence of participants as they enter. This is for highly sensitive data. So don't assume that this is the case for every piece of data. And this is the kind of thing that we go through in training of how do you understand the variations in data, the variations in reaction. This is highly sensitive data. So this is by no means the answer to how you trade all data, but highly sensitive data, this has been the case. One thing that is consistent though with data is you get varying types of participant. First up, you get the algos, the computer-driven traders. Now, these are the fastest people in the market. They will beat you. If you read the data, they've already read it and traded it. So they've got a speed edge. You can't win that game. There's no point in competing in that game. So don't worry about it. What you can then do is control the bits that you can control. You can be one of two. You can be a fast point and click trader. So somebody who understands that very instant reaction and within 5 seconds is in a trade. And that's a planned edge. This isn't just simply wait for the market to move and click. There is a clear plan and process as to how you do this. You also have what I call second wave traders, the people who understand the pullback, as we illustrated in that last slide and I talked about in detail on the last workshop. These are the people playing for that second move. You look at the little chart here, there's two phases to this. There's this second wave within the second minute of the move, and then there's the second wave to play a continuation. I'll talk about this a little bit later in terms of your technical edge. And then what you also have is the type of trader who has no edge. So often I hear people say, I'm going to trade the data. I'm going to let the market show me and let the market tell me what to do. Well, the problem is by the time the market has told you what to do, the action is over. You've missed the party. All of the opportunity has gone and you're now trading in this chop up here and wondering why you're not making any money because the market told you it's going up. And the problem is once it's gone up, it's not necessarily going to keep going up. So let's have a look at where these people come in and then I'll show you the execution on this as well. What happens to start with is the algos win the speed race here. The algos drive the market from 41.40 to 41.63 and you actually get a volatility stop. That's a whole other workshop as to how you trade a volatility stop. But the understanding of how you transact after the algos is absolutely still there. And this is where a lot of our traders did very well. You can't win this race. So your objective is not to try and get better at trading between, in this case, 40 and 63. The fast traders are the ones that understand the sensitivity, because once the algos have popped it higher, people are now rushing to get in. And as they rush in, this is what then drives the next leg of the move. So from 41.65 to 90 is predominantly fast traders. They're the people who read the data. They already have a plan that if it comes at this number, they're going to hit it instantly. And they do. That creates the next leg of the move. And then what you have is the second wave traders, the people who get in as the market whips back. And this is really important from a price adder perspective. You can't see this whip back just purely from a candlestick. You can see it there on that candle, but the reality of what happens, how do you know that you should be buying from 75? You only know that from a price adder, or you only know it after the fact and you say, oh, look, you should have been buying it from 75. I'll illustrate to you how exactly you can see this from a price adder. Here we go. Right then, what we've got up here then is the price adder of this move. So we're going to be coming just into the data and we're going to go and have a look at how exactly you trade it. And the reality of it, this isn't a case of the perfect trade. There are mistakes. People make mistakes as they're trading. And how do you go about dealing with these? So let's get this going. This is just for the data. And there you go. You get that instant jump. So that's the algos taking all that opportunity away. So we've just flown up the page. I'll take this back very, very quickly for you. Trading around about 38, going into the data. The move starts off and you see the market then jumps very, very quick. Now, as a fastest finger first trader, what you've got to do here is work out where you're going to hit it. So your plan is as soon as this opens, you're going to hit this. So you're ready. Market opens. You're hitting this straight away. The sensitivity tells you that other people are going to rush to get into this trade. And there you see huge pace within the market in terms of how it's moving higher. So this is your opportunity to then exit some of the position. We've now got an accidental short entry here as well. And this is trying to scale out too quickly, which ends up giving us a short position. How do you deal with mistakes like this? Well, what you're looking at then is how high is this flicking up? We're trading 87. We keep trading 87. The stop now in your head is just above 87. So all of this has happened within about 30 seconds of the data. This is the trade from the algos and the fast smash and grab traders, the people who get in instantly. They know their plan. They're going to get in as soon as it jumped and play for the next 20, 30 ticks. How do you play the second leg of the move then? This is the bit that you can't see from a chart, because at this point, you're still well within this one single candle. You're creating the wick on the candle. So how do you trade that? Well, what you're looking for now is, as the market drops, where does it stall? And so you can start to get a bid in. It's a more passive trade. There's an area of low volume below, which is going to help you out down at 73. So that's your next area. Thinking, right, we stalled at 78. We stalled at 73. As long as we're not dropping below 73, 72, we're okay on this trade here. And it's that low volume and then that flick down that keeps holding. That's the area to get in. And you now see within about a minute of the data, we're starting to see a much more calm move. The liquidity's coming back in. So we're not now trading on the back of this rush to enter and all of the liquidity disappearing. The liquidity's back in. Those who have got larger size and larger position to execute are now starting to come in to execute these. So we start to move up. Market's now steady. If you've bought this down in the mid 70s, what you're now looking for is to break the high. And that's the objective of that second wave pullback trader. All of this is going to be trades taken within the first couple of minutes. But as you can see from this CPI, and if you went and looked at CPI from Tuesday this week, same principle. All of the action comes within the first couple of minutes before then either a consolidation, as we saw in August, or a more steady continuation, as we saw on Tuesday. And I'll explain why you got that steady continuation in a moment as well. So there you have it. That's the way to try and execute this type of trade. And it's a skill set that not everybody's got and not everybody has mastered. And this is a really important thing to understand, that even for our senior traders, they're not necessarily always performing on this. And so what then happens is they go and look at the other senior traders who have performed well on this. And this is something that happened with two of our senior traders this year. One of them had a reasonably disappointing payrolls. What he's then gone and done is gone and spoke to one of our coaches. And this is the difference or the use of both a formal and an informal collaboration. With a formal collaboration, this is about going to a coach, speaking to somebody who's going to be able to discuss this in detail with you and try and identify and help traders identify where it is that they need to improve. Then they can go and seek the person who is going to help them improve the most here. What happens after the payrolls, where he feels he's traded subpar, not extracted what he could of a major opportunity, he's gone and discussed this with the person who recently has been the best at that fast reaction trade. All of a sudden, the performance jumps, CPI improves, but this isn't the end of it. Once you've got that skill set, your objective now is to drive this on, to drive this further. And this is something I talked about in some of the earlier workshops, positive competition. Then what his goal now is, having learned this new skill, having learned from the best person who's been trading data, now there's an objective to try and beat that person. And likewise, that trader who was previously the best now has the objective to try and make sure that he stays the best. So that positive competition is really what's then helping the senior traders drive themselves on as well. It's not just simply being able to look at data and go, okay, could I trade that better next time? It's about how they discuss and collaborate with each other to drive that further forward. So from there, we've seen how you can trade data very fast and the value of using a price adder to improve your execution on these areas. Final thing then, because I'm sure there's going to be some of you thinking, I'm still not comfortable with that. I don't like the speed, the volatility of it. I'm much more a technically orientated trader. And some of our traders are. You know, the job of any coach and any educator and any trader is to understand variations in trades, to understand your own style. And so that same trade can be taken in a different way. Because what you can do is you can use data to allow you to play a technical move. The data provides volume. It provides more participants, and more participants are what can then drive a move onwards. So you can then select a market based on the scope of the potential move. This way, you then make your decision making rather easy. You can say to yourself, right, what's the ideal piece of data that we can get to trade a certain market? I'll illustrate this on the August CPI, so the same CPI that we just looked at. We'll illustrate this then looking at technical trade in the euro, which a few of our traders did pick up on, which is not a market that many of them traded. What they're looking for then is the ideal data result. They want to see from that August CPI a lower number. If they get a lower number, this is the chance for the euro to rally. And so now they've created a binary scenario. It's either buy the euro on a lower number or don't trade it. But if they get that opportunity, they're going to execute. So you get the lower number. And what they're looking for is this move here, that if you can break this little zone here, this little execution zone, 102.75 to 85, the expectation is you can reach the top of this 3-week range. If you reach the top of the range, the breakout continues. So this is a trade you could have planned before the data. You're using the data to catalyze that move. And that's the key to this. And so what you end up with is a situation like this. The data creates the jump, which gives you the opportunity to get in anywhere between that execution zone, which ran from 102.75 to 84, all the way up to the highs of the range, with your expectation being that the range is going to break and we're going to see a continuation move. That's exactly what you get. This is the value of understanding the bigger technical structure. And it gives you multiple trades. First up, you can take the trade on within the first minute using the skills that you've just seen from the price ladder. But it also gives you the conviction to play this move again. You know that you're still going to get the participation within the market because you've got a higher number of people trading on the back of the data. The data changes the narrative, which then means that you've now got a new execution zone, a more passive trade that comes around about an hour later. Buying above the top of the range, but also using the low of the pullback on the second wave of the data provides you with an entry area, a zone of around about 10 to 15 ticks. You can buy anywhere in that zone with the expectation of a break through new highs. And so it's not just simply about trading data. It's about always looking at variations, always looking at other opportunities. And this is highlighted by the junior trader that we talked about at the very beginning. He did this very, very well. He doesn't trade the euro. This isn't a common market for him to trade. And this is a month's performance. He does 6 trades in the euro, 4 of which are losers. But look at the performance of the winners. They create these 2 big jumps here. And what these have come down to is not that he's suddenly decided, oh, I'm going to go and hit the euro. What he's done is he's understood the technical picture. And whilst, yes, he's traded the S&P on the first instant on that CPI number, the value of that technical picture and his understanding of that area of the trade provides an additional opportunity, a new chance to extract some extra P&L out of this trade, out of this CPI data. And this is the value of having these discussions around these opportunities. This is why on the CPI earlier this week, almost all of our traders went for the S&P. Why? Because of the technical landscape. Yes, the S&P has been very sensitive recently, but this time it has got huge scope for movement. And this is why you end up with this 2 big point move in the S&P over the CPI. Not because it was wildly more out of line than the previous one in August, but because of the grinding move that you had up to CPI. With that grinding move into it, you've got all of this space for the S&P to drop down. And as it drops, it's going to stop out participants. This is why you also get the continuation trade. So you can play the continuation with conviction. If you contrast this to the 5-year, same time frame, same piece of data. The 5-year doesn't put in the same move. It's a very big, very fast move first up on the, this is a half-hour chart. But by understanding the technicals here, this is a break of recent lows. So the break creates this one instant drop, very, very fast. loads of people get in and the business is done. I spoke to one of the junior traders earlier who said it was very frustrating trying to sell the 5-year after the data. And quite simply, the reason is all of the action gets done as soon as that level breaks. Whereas with the S&P, understanding the structure means that the action continues to go on as people get stopped out all the way down that grinding move. So the technicals are there to then be driven by the data. It's not simply that you can either be a technical trader or a data trader. It's about using the skill sets that you have. If you're more technically orientated, use the data to drive the trade that you're in. And this is what all of the traders were doing on Tuesday. It was that collaboration, that discussion around how they're going to go and trade the data and what markets they're going to trade. The big choices with the S&P and the 5-year, the S&P was by far the best performer because people were able to continue to extract out of that as you got the continuation move throughout that main session. So there you have it. What we've covered so far then, we've covered the difference between two traders, what it is that allows a junior trader to grow, how you go about increasing your performance by seeking out those who are going to support you best, but in supporting your areas that you have identified for improvement. We look to where the opportunities are in summer markets as well. Opportunities have been less, but the ones that have been there have been highly valuable if you can execute on them. And then also different variations. Don't assume there is one way to do things. There is no magic bullet in trading. It's about understanding your style, your skill set, and matching that to the opportunity that's available. And that was what you got from those technical trades. So there we have it. Nice wrap up of the 4 sessions. I know Craig's coming back on in just a moment. I'm sure we'll be able to answer a few questions a little bit later on. So back over to you, Craig.
With great pleasure, introduce you to the Axia Futures 6-week online career program. Now, if this is your first time hearing about it, this is a way for you to get trained professionally right from your own home and how you can have the potential opportunity of trading a fully funded account. Now, our career program, it runs over 6 weeks. It teaches you everything you need to build a career as an active futures day trader and develop like one of our top performing traders. It takes you through the entire edge hacking process that we employ here at Axia Futures. You get feedback on your trades and trade ideas, daily training sessions that are streamed live from our training room here in our London floor. This is also the training that's been given to all the traders that we've recruited for financial backing that are now in the Axia team. So in other words, it's also in our interest to give you the best training possible as our proprietary trading arm looks to back traders who first complete this program. So week 1, it's all about building a solid foundation in the world of futures trading and proprietary trading. You'll learn the fundamental principles of what you need to understand in order to execute trades and to constantly grow and improve your setups over time, and how to use technical analysis for making better trading decisions, and how to create a map of where you want to get involved and take trades on in the market. So this is a different way of using technical analysis for high-level decision-making, something you don't usually find anywhere else. And in this first week, you'll also learn about the elements of the bond market. And here's why it's so important. So we typically hear about the hype and excitement and things like the global crypto market. I know that some people who have tuned in today trade the crypto market, and that's great if that's where you're finding edge. But why is it that our team of 7- and 8-figure traders very rarely trade crypto? Well, one of the primary reasons for that is the lack of liquidity. When you have no liquidity, the trader is up against a multitude of uncontrolled risks when markets are in free fall or in high volatility. So this picture really puts into perspective, by comparison, how much bigger, for example, the gold market is compared to crypto. And then how much bigger the simple cash system is compared to gold. And then how much bigger the US stock market is compared to cash. And similarly for global GDP. But then we have the global bond markets, some of the most liquid tradable assets in the world and highly responsive to global macro news. Things like the Russian-Ukraine crises, the emergence of COVID, the inflation crisis that's going on. Then bond markets offer a pure approach to trading these drivers of volatility. And that's what our traders are trading and what you'll learn about in this first week. And then week 2 teaches you about the principles behind market profiling. Now, the market profile is our main idea generation tool used for uncovering top trading setups. And without it, a lot of traders in our team feel like they're flying blind because they don't see or understand the market structures that lead to asymmetric trading opportunities. So the market profile gives you contextual understanding of whether or not the market is balanced or if it has scope to move. Now, if a market isn't ready to move, you can have all the setups you want, but it's not going to budge. So market profiles are used by some of the biggest traders on the planet, and especially traders in our team. And you'll learn the best practices from elite traders on our team who have unique edges in this one area alone. So we call them profile engineers. And by going through our training, you're surrounding yourself by traders that then lead our education team and our learning team, which then filters down into our coaching team and is transformed to what you're exposed to. So it comes directly from the top traders in our team. So we have this not only for our profile edge circle, we have a price ladder edge circle, a footprint edge circle, and macro edge circle. These are all our areas of edge development, which I'll tell you a little bit more about in just a moment. But this gives you the collaborative edge and edge hacking process that you benefit from when tapping into a team of traders. And in the second week of the career program, you'll learn 10 strategies that form the basis of market profiling and how these traders approach markets in different environments. And none of these patterns are actually recorded in any of the traditional trading textbooks on market profiles. So these are all unique type of profiling methods that have been developed within Axia. So you can learn how to properly analyze a chart to know what a given market is most likely to do next. And applying market profiles in your trading is a major step towards achieving more consistent trading results. And then week 3 then covers order flow trading for efficient timing of your trade executions. So once you know that you want to be involved in a trade and that the market has scope to move, order flow then becomes the rawest, purest information given by the market. And for a lot of the traders on our desks, it's the one thing they watch most because it reveals key insights that just aren't observable on a candlestick chart. Things like market velocity and the change in price personality. So seeing that other people are also entering into the market with you to keep the momentum going, that's a powerful bit of information to understand when you're looking at order flow. So expert traders on our team. So on the left here, it's kind of visualizes for you the expert traders on our team, then feed into our learning team, which then filters through to your coaching and learning experience. And in week 3, Richard teaches you 10 to 15 price data strategies designed for different environments. So this is a nice way of dissecting the environments. So you'll dive deep into these different strategies, and these are all essential order flow strategies, which form the foundation of what our top traders apply day in and day out when they're trading the markets. And once you know how to combine the different tools like the price data, the footprint, the market profile, you can start working on different executions, strategies, and executing trades as the same way as those trades taken on by some of our top order flow traders. So we teach you how to read order flow in a way that develops edge and puts your trades on the same side as our elite traders. And then week 4 is a really powerful one. And it's here we're exposed to macro trading principles. Now, this is the advanced part of understanding the narrative within current market environments. And not only will you be able to find and understand and execute trades based on macro trading principles, but you'll start opening up a whole new level and whole new type of edge where most people don't develop. So macro trading is where our team has a unique edge, and it's effectively what launched Axia on the eve of Brexit. And many of our traders have had some of the biggest trades in just this one area alone. And it's still quite baffling to hear how so many retail traders are still discouraged from participating in macro events, especially if you read any of the conventional trading books out there that tell you to avoid being in markets when any data or news is coming out. We say otherwise. We say this is where our traders are having massive performance and are really outperforming and exploiting massive edge in this one area. So then week 5, it's all about how you consistently improve and develop as a trader. Now, once you have a framework from the prior weeks, it becomes then more about having a process to continue making marginal improvements every day, every week, every month, and getting better over time. So you learn how to build your own strategies in different market environments, and then how to continue adapting and thriving throughout your career. And then week 6 takes you through the benchmarking process, where Richard has access to the risk screens of some of our best traders. There's over 100 traders in the Axia risk management system. You'll become aware of the trades that they're taking on, how they're executing and managing them, so you can embody similar thoughts and behaviors in real-time markets, and learning about their routines and processes so that you can start applying those principles to your own trading and your own development. So here, just as an example, are performances of two junior traders who've started having some massive successes in their careers for following these processes that are taught in these final 2 weeks of the career program. You can see the massive breakout in P&L in their equity curves. Keep in mind, this is also the exact same training that's been used to train and develop a team of proven 7-figure traders on our floors. And everything you'll learn is exactly what our proprietary trading arm uses to source trading talent for our desks. So this training, just so you know, it's been the bread and butter input that's pushed many traders to go from struggling with maybe getting stuck on trading 1, 2, and 3 lots to growing to the size where they're putting on positions of 300 lots and even higher. From being losing traders, losing money on a consistent basis, to maybe breaking even, to then growing into 5-figure traders, 6, 7, and now we even have 8-figure traders in our team, facilitating the transformation from unprofitable and struggling to becoming consistent performers. So the next training starts on the 20th of September. It used to start on the 19th, but then unfortunately the Queen passed away here in the UK, so that has become a holiday day, a special day. So we're going to be kicking it off on Tuesday, the 20th of September. So you can write that date down. You can also defer to the next cycle, which will be in 2023, if that's your preference. But I'm sure if you're excited, you're going to want to get started as soon as possible. So the training is streamed live from our London trading floor. It includes an interactive chat with Richard. So you can type messages, get real-time answers. All sessions are recorded and uploaded in case you're not able to attend any of the sessions live. So that means no matter where you are in the world, what time zone you're in, if you're working a full-time job, you can make this work for you. You can always ask questions, watch sessions in the very next moment it gets uploaded, and you can even watch sessions in faster speed if you want to fly through them, and have your questions answered in the very next session. All practice drills that you're given have also just been internally developed by our team of top performing traders. And you can see that the schedule from the training starts from 10 a.m. to 12 p.m. UK time, and then 1 p.m. to 3 p.m. UK time. So you can make some notes there. On that, there will be a recap of this. But basically, here are a few comments from the career program that recently finished. So Sano says it's been a brilliant first few weeks. Brolin says Rich is the best trading teacher he's had. Salesh says it's exceeded his expectations. Brad says it's been phenomenal. And still even more bits of positive feedback that we always love receiving and reading. And in addition to this, you're going to get 6 weeks free access to the professional trading platforms that are used by our traders. So that comes with software settings that are used by our pro traders, so you can look at markets in the exact same way as them without spending unnecessary time or going by trial and error trying to figure out how to set up your trading platform in the right way. The best settings to use, you're given workspace templates that you can upload for different market environments, so you can quickly start identifying and reacting to major market moves in the same way as our traders. And this will help you see things like correlated market order flows displayed clearly, so you can feel confident during powerful market moves. So you can see this trader, he's got his price that is set out in a particular configuration. And this helps him see that maybe there's two markets that are correlated, and if one is pushing through its highs, but the other one is lagging behind it, and he's in that trade in that market that's maybe lagging, seeing that correlated markets, the flows are there, gives him that confidence to hold on to his trade and not get scared out of the position. So let me ask you, have you heard of that 90-90-90 statistic? You know, why do 90% of traders lose 90% of the capital in the first 90 days or less? So it's become a bit of a cliche in the world of trading, the 90-90-90 rule. But the question I have for you is, what if you learn something that helps you get past those first 90 days of your trading career, or saves your trading account? I mean, especially if you're someone who's maybe lost the trading account and you're topping up again and you're just getting started. What if this gives you those training wheels that can protect your trading account? It gives you the right framework to learn from a proven team of performers that can preserve your capital over the next 90 days. I mean, how big is the average trading account that most people have? For some people, it's maybe $5,000, maybe $10,000. For people who are really serious, it could be $20,000, and saving 90% of that could very well be worth your time and effort. And I'm sure by now you must be wondering, what is the price to gain access to this world-class trading from a professional trading floor? And since there aren't many alternatives out there, and what's normally found online is completely wrong and not what professional traders actually do on professional trading floors. So our goals here are really to help home-based traders escape the false promises of most trading educators out there, and to find and hire talented traders to grow our team. So when we find strong trading talent, there's a lot of upside for us too. So we're happy to offer this training at a much cheaper rate than it would typically be found elsewhere. So the career program, it's not priced at £10,000, 7,000, or even £5,000. Right now, you can gain access to this training program for only £3,490. However, I want to offer you something special for taking the time to tune in to today's workshop and dedicating yourself to learning from a real trading floor. So just for you on today's workshop, Richard, Alex, and I are going to give you a really big discount. And this is to reward you for choosing to take action and make a change in your trading career. You deserve for us to pull out all the stops and support you as best we can all the way. So what we're going to do is, if you commit today, we're going to take this regular price of £3,490, and that is the price that's on our website and what most people enroll in this career program at. So if you want to double check that, you can go to axiafutures.com and go to the trader training area. We're going to take this regular price of £3,490 and discount it all the way down to just £1,797. So just to put that into perspective, that's almost a 50% discount off the regular price. We've never before done it like this, and this gives you full access to the entire program. But that's not all. I want to give you some really awesome bonuses to go along with this. So let's dive right in. So you currently have the career program that starts very soon. And at some point, you probably want to dive deeper into some of these tools like the price ladder and market profile and footprint. So what we're going to do is you're going to get any one of the 3 Axia Edge courses free. And these all have a value of £1,200. So again, you can check these out on the website. This is what our Edge courses sell at. So that's the price ladder and order flow strategies course, the volume profiling with strategy development course, or the footprint Edge course. So the price ladder course, I'm going to just run through them real quick. So the price ladder course takes you from complete beginner to the advanced strategies that are used by our top traders. Now, this is a full training into everything the price ladder shows you that the charts don't. Things like absorption, flipping, spoofing, large orders on the book, and a whole lot more. You learn over 20 order flow strategies to help you get in and out of trades at the exact right time. You also learn how to see opportunities develop ahead of the chart and avoid falling victim to traps that sometimes suck money out of your account, not to mention what it does to your confidence, and when and how to increase your size and scale up your trading to achieve bigger targets. Now, this is a whole art form in itself, the ability to scale up. So there's different psychological elements that come into play during this process, and that's covered in this course. And this comes with trader interviews, live execution replays, proprietary drills that are used by our traders to practice and perfect their timing and leverage up. And this is the secret weapon we use for improving traders at a much faster rate than what's typically seen. The ability to load up a bit of price action or order flow patterns that occur in the market and then go back and replay them and practice executing them. That is like being able to go to the gym while everyone else is maybe taking the week off or taking a holiday. You can get those extra reps in and accelerate your development. Students who take this course often find it to be one of the most valuable trainings available. For Kim, she says it's the best course she's ever taken. Similar for Amadeo and Danny, and now a really valuable bonus for you, absolutely free. Then there's the Axia volume profiling course, where you learn 11 volume profile strategies. And as mentioned earlier, this is the tool that helps our traders find asymmetric trading opportunities that you'll never read or hear about from any trading book out there. And over the years, our traders have collected an arsenal of nuanced patterns and strategies and have put these market profiling strategies at the heart of their discretionary edge. So this helps you make better trading decisions and achieve more consistent profitability when you start employing them. Then you have the footprint course where you'll learn 10 unique profile strategies. So you'll become empowered by seeing inside the market using the footprint tool. So you can start focusing on stronger, high probability setups and avoid those weak, costly trades. You learn how to read the interaction between buyers and sellers in a way that makes you more objective in your decision-making and allows you to execute and leverage up your strategies with greater confidence. Now, previously, traders had to watch the price ladder all day to keep track of how buyers and sellers interacted. Now you can track order flow at a glance without hours looking at the price ladder with the footprint tool. We use this in combination with the price data, but putting them all together is one of the most powerful combinations. We call it the Axia Holy Trinity: the price data, the footprint, and the market profile. So altogether, that's either the price data course to help you time your trades with fast, accurate execution, the market profile course so you can become a master at generating high probability, or the footprint course, which helps you track order flow and access and leverage up on top trade ideas. So that's any Axia Edge course with a value of £1,200. But we're not stopping there. You'll also get access to the Foundations course, which is designed as an 8-day fast start course. Now, this quickly takes you from complete beginner to having a strong foundation that every serious futures trader needs to avoid making critical mistakes that sometimes cost you later on in your trading career. You'll have the entire world of futures trading demystified, and any gaps in your knowledge will get filled in during this 8-day fast start course. You'll gain a full awareness of all the unique areas of opportunity that usually the veteran traders know to observe and capitalize on. Things like bond auctions, unique trades when options and futures contracts expire, and a whole lot more. And this is especially powerful when you want to recap after the career program. It's a great 8-day fast start course that just gives you all that knowledge to fill in any gaps. So that's the career program, any one of 3 Axia Edge courses and the Futures Trader Development course. But now, what about when the career program is over? How do we make sure that you're actively applying what you've learned and you're growing while you are trading? So to help accomplish that, we're going to give you 3 months of free access to our daily live streams. So as you start trading and you're putting things into practice, you're going to need help preparing each day. You don't just roll out of bed and start trading, right? You need to learn how to spot opportunity and train your eyes with current market examples. And to be honest, it can also get a bit lonely trading at home all alone. So this gives you a place where you can connect to the Axia community, and it's like having your own proprietary research team behind you every day, helping you save time and focus in the right areas and attack great trading setups while connecting and growing with a community of like-minded traders. Comes with 2 to 3 streams every day. These are all recorded again in case you're not able to watch any of them live. Comes with, often we include trade breakdowns and replays from our top traders, and it's a really valuable tool to help accelerate your development. So that includes the 6-week career program, the same training that's been used to develop a team of proven 7-figure traders, any one of 3 edge courses to perfect your timing and generate asymmetric trading ideas, see inside the market to avoid the weak, costly trades and leverage up on high probability setups. And then the Futures Trader Development course, so you get a strong foundation of knowledge and gain full awareness of all unique areas of opportunity that experienced traders know to look for. And then 3 months of access to our daily live streams, which is like having your own research team behind you while giving you a place to connect and grow with a community of like-minded traders. Now, the total value of that, we've conservatively estimated at £5,860. And if you really consider the time it takes to accumulate the knowledge to put this all together, observing a team of professional traders, not to mention the desk fees they pay on a monthly basis, the profits that they extract from markets using these techniques, you can easily begin to see how the true value vastly exceeds this estimate. But that's all included today, free when you're enrolled, to give you the best support possible in your development. And again, if that was just the 6-week online career program that was being offered today, that's still a 50% discount or close to a 50% discount from the normal price that's on our website. I'm confident that this is one of the best opportunities you'll come across in the world of trading. The final question for you now is, are you going to take advantage of this potentially life-changing opportunity? And you can see how it is life-changing because it's already altered the careers of so many traders, either in our team or people who've trained with us. And especially early on in the days of Axia, they didn't have access to an opportunity quite like this. Many traders didn't have access to these bonuses. We're often the ones who are forging and documenting the path of what works in the markets, making mistakes and discovering the best practices that we can start employing in trading today. And just before we go on to conclude this workshop, and we'll have time for Q&A, and I think Alex may have something special that he wants to talk about. If you're on the fence about joining this program, I'm going to address a few points to help you decide if this is the right program for you. So the first thing is, when we were deciding how to price this, we basically had 2 choices. And the first was to go as cheap as possible and to try to sell as many places on this program as we could. But the problem with taking that approach is that it doesn't incentivize our team to pile on the value and give you the best support possible. So the second choice is to raise the price a bit and give you absolutely everything you need to succeed. And we really did pack it in here. And sometimes, people say to us that this offer looks like it's too good to be true, the type of things we put out there. But the reason why we do it is because we can, because trading is our primary business and we're tired of seeing all the nonsense and misinformation out there. So we want to raise the standard in the world of trading education and give new talent the best shot at being successful and joining our team. And this also gives us a way to find and hire talented traders to grow our team. So we're giving you our best so that you can reach yours. And then considering the alternatives of what you may invest your funds in, and invest is really the right term. See a lot of people that get paid every few weeks, they cover their fixed costs in life, and any money that's left over is often treated as disposable income. It gets blown on things like fast food, coffee, clothes, things that are short-term pleasures that are gone in an instant. And most people spend cash on costs that don't add value to their lives in a meaningful way. But if you want to get to the next level in your trading career, you need to invest in products and services that actually help you progress and achieve your goals. And that's what we've put together for you here today. And then another alternative to investing in this training is to maybe spend years of your life trying to figure out how to do this stuff by yourself. And while you might succeed, you'll never get your time back. Instead, you could save your time and effort because we've already done the work of documenting what works and what doesn't. It'll cost you in the short term to work with us, but over time, money replenishes, whereas your time away from friends, family, and other pursuits, that doesn't. It's possibly wasted effort that's lost forever. So alternatively, you can enroll and get a head start. And if we decide never to make an offer like this ever again as a trading floor, we're going to continue being successful because trading is our primary business. But really, this is about you. You may think you've learned a lot of cool stuff today, but by tomorrow, there's a good chance you'll slip back into your normal routines and behaviors. And that's what most people do. But because you're one of the few who showed up, absorbed everything through our series of workshops, I'd like to see you get the best resources and support possible instead of going back to your old habits and routines. I'd love to see you be successful by breaking them. And that's why you should invest in this training program today. So there it is. Thank you for joining us. It's been amazing to present this with Alex and Richard. I think Alex may have a few extra words that he wanted to add. Alex, are you there?
Yes. Hey, Craig, and thank you. And I just wanted to go through just a little bit on what that collaborative edge. I thought, wait until the end of the session, our career program starting on the 20th of September. I know Craig has you have a timer for that fast action, which is incredible. It's the first time we've ever done it, shown where there is a funding trial. We put the rules, and one of the fundamental rules in one of these in the funding trial, and now we are going. We're breaching our brick and mortar business. We're going remotely to source talent. We have approximately just over 150 professional traders on our book. In the London office, we have around 35, in our Poland office around 10, and the rest are either remote teams or remote individuals. And so we're having to work incredibly hard on our technology, work incredibly hard on providing support for our remote traders, because that is a large part of our business that we need to support on the pro trading arm. We have our two arms. We have our education arm, which supplies the talent for our pro trading arm. To answer that question, Jared, yes, we are able to supply remote traders in the US, but this funding trial, one of the key, and our funding trial is difficult because we want the best to pass, and those who go through the career program. That's why we don't advertise our funding trial publicly. We only have our funding trial if you've graduated through our program, because you need to be able to know how to approach macro data points. You need to know how to develop a narrative. You need to know of how to organize your tweet deck when news is breaking out, when a Russian-Ukraine crisis is shifting through the market. And through our collaborative edge, and I'm going to be showing you a slide of how we organize our collaborative edge technology so we support our remote traders. But our funding trial, that 12 days of consistency, because we know if you develop that consistency, well, you've seen, I mean, we have shared equity curves, we've shared YouTube videos online, those traders, you can find me any community out there who scales their traders like we do. So if we find that consistent trader, and it's why we have the consistency rule, a trader who just makes you know, who just achieves a big number in 1 or 2 days, we're not interested in. You can only scale when someone is consistent. All of our best traders were at the beginning of their careers, were doing $100 days, $150 days consistently, or $250 days, and they're doing it day after day after day, because that is what you can replicate until you hit the liquidity constraints when you're trading, you know, 1,000, 1,500, 2,000 lots. So we now decided in this workshop today, as part of this series, to have that. You have after the career program, we suggest you to consolidate that learning after that 6 weeks. It's an intensive, powerful, deep impact learning experience. And after those 6 weeks, we recommend that you take 2 months to distill, you know, apply what you learned through the program, and then only do the funding trial, because you have access to that funding trial for 12 months for that 3-month evaluation, and make sure you're ready. And then you say, okay, I now want to participate in our funding trial. So, and that's how we suggest we speak about it on the last day of our career program, the best way for you to approach your career after the 6-week training. I will answer some more there's questions here, so I can be here for a little bit, but very powerful. And I just wanted to share now, you know, without showing the screen, if Craig, you can just share the link in here again, just in case people are going to be switching over to my screen. I want to see if I am able to change my screen. Are you guys interested for me to show you how we organize our collaborative ecosystem? Just let me know if you're interested. Those who are left on the call, just let me know if I can just show you a framework. Those who are still here, okay, fantastic. A few more yeses, and then I'll change over. So just let me know. Okay, so just wanted to sketch this for you. So how we've organized and structured all of our development, you know, and Richard speaks about the informal part and the formal elements of training and development. So what we call that extended edge formula, that extended trading mind. And I'm going to show you, and let me just select the right color, and excuse my art and my drawing. But this over here is you. Okay, now the reason why the whole London prop industry collapsed is because there was where traders just became siloed. You know, humans have this incredible social cognition, but most individuals and many of the traders who disappeared from 2000 to 2017 switched off that social cognition. March 2020, when a lot of traders went home, I spoke to a trader today who had a trading team of 20 traders in the center of London. He said all his traders went home during COVID, and all of them literally collapsed because they didn't know how to organize themselves at home. So we are having to support our home traders. How do we support our remote traders? So we identify our major edge circles. So these edge circles over here, and all an edge circle is we identify the traders who are specialists. So these are, you know, we'll identify, you know, 4 to 6 traders who are top traders in a certain expertise. And in this instance, this is, for example, price ladder. Okay, so it's price ladder. This price ladder plus footprint. This over here is profile for developing your ideas. So excludes, and this over here is macro. Okay, I'll just go MA. And so over here in the macro, we have our traders such as Demetris, Wackas, you know, Andy, our top macro traders. For our profile, traders such as you know, Simon and Joe. For our price-added traders such as Gabrielle, and a whole selection, Sven, a whole selection of our traders. And we take their best practices, the opportunity sets that they're focusing on, and then we move that and shift those practices, is what Richard calls a trader. Our education isn't a one-man band education. Our education is trader-led education. And so what happens over here in this trader-led education is then it then filters through to our coaches. We have 3 main coaches in our team. This then transforms all the practices, all the strategies, how they develop, and it's why our junior traders who are able to leverage the collaboration of the group are able to accelerate their growth, like Richard showed you on, you know, in the equity curves. And so in this instance, then what happens, we screen these plays, we organize the structure from each of these edge circles from a collection of our elite and senior groups of traders, and then we feed that into our traders. And this is what the whole 6-week training program, every one of those weeks, we capture each of those edge circles, we then filter through, and Richard delivers that, because Richard's also keeping an eye on the risk, of our traders, whether they're making money, losing money, why they're losing money, why they're making money. So that curiosity is also powerful. And again, we amplifying that that social cognition. And for those of you also, and I'm just going to paint so that's effectively a very simple but powerful what we call our edge formula, our extended edge formula, is how do we extend our cognition beyond the limitations of our own mind, our own brain, is how you plug into expertise. If you're learning tennis for the first time, if you're learning American football, if you plug into people who have the best practices, you're going to shortcut your learning curve. And time is the essence in this world. And when I started, what our traders learn these days, it took us probably in the beginning of our careers, it took us 4 years. I'm seeing junior traders learn what we took 4 years, 5 years, that they learn in around 6 months. But that is because we've leveraged the collaboration. You think in any time that you've collaborated with experts in a certain domain, you've increased your skill set more rapidly. If you try and develop and solve, you could focus on the wrong area for a long period of time. That's why one of our junior traders, who was in a very deep collaborative environment, but just switched off that collaboration. And you saw the divergence in his equity curve versus versus our other traders. And I will answer some questions very soon. So I just want to show, and then another powerful thing that we are sharing in this program starting in September, and I will share this with you now, is something incredibly special. That is in I think it's week 4 of macro trading. And this is effectively the real-time learning and how to build your collaborative edge and learn to trade every central bank event in real time with our traders during macro week. So that's our live virtual trading floor. So we've invested in technology. It's taken us about 4 years. We've equipped 2 of our floors with the cameras. And so you learn to trade the biggest central bank events alongside our team with real-time coaching commentary. And so you're activating the real-time learning mechanisms of when something's breaking over an ECB rate decision, FOMC. One of our core edges that most non-professional retail traders don't even try to decode. This is what we've now implemented in week 4 of the training. It's building your collaborative edge, live streaming of our traders in action during the most high impact central bank events. And I just want to share that the central bank events now are at their most exciting in the future space that I've seen in 10, 11 years. I saw in 2004 during the Greenspan era. And back then, interest rates, moving market, the macro data points that Richard is speaking about today are, in August. Some of our traders made exclusively their money around those central bank events and around the big data points. It is now, as futures trading, if you're just a technical trader, if you're not building your macro edge, you are going not to have the ability to scale yourself. You don't even know what you're capable of unless you learn something. And this is the sad thing, is when you see a lot of traders not enabling or allowing themselves to see opportunities that they didn't even know existed. And sometimes, I had one of our traders, our junior traders, Harry, wasn't preparing for European Central Bank rate decisions. He said, "Oh, I'm useless at trading them." I said, "Well, you'll remain useless because you never prepared for them. You started preparing." I said, "You're not going to get the immediate money feedback within 1, 2, or 3 meetings." And so he prepared. And now he's, over the last year, he's had some of his most explosive days on those months because he allowed himself to learn and he allowed himself to, collaborate with the traders around him. And so you get that real-time commentary from our traders and our coaching team. The combination of these two have almost, 40 years of experience commentating our traders in real time, as well as the positioning tool. You'll see the traders are short or long, which markets over the event. So imagine in real time, you're just developing more confidence, and then you're reviewing and understanding how we're approaching you. You're decoding the system of the approach over these events. And again, that is, that immersive learning at its deepest and deepest core. And so imagine your skill development and transformation joining our team live. And you get sessions with me when I go directly to a couple of traders, and that's during the 4th week of the career program. Just that 4th week on its own is incredibly powerful if you've never traded macro events, if you want to improve, if you want to understand what's moving the markets globally. If that is you, then this week 4 is incredibly incredibly powerful. And effectively, this is what we talk about, that extended trading mind, you tapping into beyond the, by being at home on your own. The 6-week program extends your understanding beyond the limitations of your own mind, where you're tapping into this group of 7- and 8-figure traders. Each one of these traders started with 1 lots. Many of these traders were on the brink of stopping. And so all of them have had the same story, the same struggle of being in the careers, because that is the nature of trading in the beginning. But you accelerate that development if you tap into a strong collaborative group and a collaborative environment.
All right, cool. I think, we've covered most of the questions. There may be just one other that just popped in there, but we are approaching the end of our 15-minute stop there. Alex, Richard, is there anything you want to say before we wrap up here?
No, it's been fantastic. Great session. I've seen a few people who've joined, so really excited to seeing you next week. It's going to be an incredible 6 weeks, and probably, Richard, some of the most exciting markets we've seen in a very, very long time. And part of the training is built on understanding bonds, understanding how bonds influence other markets. The correlations are powerful. Understanding the interest rate market, which we train, or how they affect the ES, the NASDAQ. It is the most. We have traders who started a crypto desk for the last 2 years coming back into futures. So that whole journey of the crowd and crypto, but coming back because the future space, macro trading, the discretionary trader is so alive and healthy if you cultivate the skill set. So it's been fantastic. I look forward to those who join to see you next week from my side. So thank you.
Yeah, thanks, guys. Been a pleasure. I will see some of you next Monday.
All right, cheers, guys. Thanks for tuning in.
Bye-bye.